What's up, you guys? Welcome back to the channel. In today's video, I'm going to cover where NIO could potentially be at in the next 5 years, and then I'm also going to go over why they've actually dropped in share price over the past few trading days, and what this could mean for NIO investors. But before we actually get into all the details, for those of you who are new here, my name is Evan, and I make videos that show you guys different ways of making money in the stock market. So if that interests you guys, make sure you subscribe and hit the notification bell so you never miss when I upload. Also, if you guys enjoy these video updates, let me know by going down and hitting the like button, because not only does it let me know that you guys enjoy these videos, but it also really helps out the channel and it helps push these videos out to more NIO investors. Now, looking at where NIO is trading today, they're actually down around 7% right now, currently trading in the low $20 range, and they're down over $1.50 right now. Right when the market opened, they were trading right around where they closed yesterday, but pretty quickly they started tumbling and they went from $21.50 at market open down to about $20.50 within the first 20 minutes of trading or so. And then from there, it was just a constant downwards trend throughout the rest of the day. And now we're finally starting to see them somewhat level off between $20 and $20.50. Now, if we zoom out to the 1 week chart, you can see that they're also down almost 10% on the week, currently down about $2 or so. But if we zoom out even more to the 1 month chart, NIO is still up on the monthly chart and they're up about 14.4% right now. And so even if you had bought in at any point during this last month of trading, you'd more than likely be profitable because they've seen a constant upward trend throughout most of the month. Now, of course, there have been dips and pullbacks, but that's to be expected, especially what's going on with NIO and what's happening in the overall auto market right now. But despite everything that's happening right now around the entire auto industry, I think given 5 years' time, we're going to see some pretty big growth for a lot of smaller companies, especially companies like NIO and other Chinese EV stocks. I think it goes without saying that as long as these companies stay in business, they're going to be much larger in size based on their revenue, and hopefully NIO specifically is going to see some profits in the next few years. But on the other hand, if we do see slower than expected top-line growth and a delay in their path to profitability, the years ahead are going to show a lot of downside risks for NIO stock, which takes into assumption that they're going to be less successful in mass market penetration than what investors had previously expected. Now, while we have seen NIO pull back substantially over the past few months, and especially over the past year, where last January, in January of 2021, NIO was trading around $60 or so, and now they're about 1/3 of that, trading at $20. But following this correction right now, it still puts NIO in a more expensive position than its Chinese EV peers, which include Li Auto and XPeng. But there are 3 key metrics that NIO investors should mainly focus on right now, and these are going to be the revenue, the vehicle gross margin, and the deliveries that NIO reports. So starting off with revenue, we actually know that based on their Q4 2021 financial results, NIO's top line increased by plus 49% year over year when compared to the fourth quarter of 2020. And their revenue was largely in line with market expectations, as they also exceeded the market consensus sales forecast by over 1.5%. But of course, you can't have all positives without any negatives, because on the flip side, NIO's revenue only grew by a marginal 1% on a quarter-over-quarter basis in the fourth quarter of last year. And as a comparison, revenue for their peers like XPeng and Li Auto actually expanded by 50% quarter-over-quarter and 36% respectively. And then on a year-over-year basis, XPeng and Li Auto's revenue growth rates were also relatively faster at 200% and 156% respectively in the recent quarter. Now, of course, one of the reasons why NIO's numbers aren't as big as XPeng and Li Auto is because they didn't actually launch any new models last year, and their top line expansion has actually trailed the key Chinese EV peers, which in turn made their top line expansion trail both XPeng and Li Auto. Meanwhile, NIO disclosed at the recent quarterly earnings briefing that their vehicle gross margin actually improved by 280 points quarter over quarter and 360 basis points year over year to 20.9% in Q4 of 2021. And they attributed the gross margin improvement in the recent quarter to the growth in revenue per vehicle and the cost savings brought about by using a different battery, which specifically is the 75 kilowatt LFP hybrid battery. However, NIO was guided for a relatively lower vehicle gross margin in the 18 to 20% range for the full year of 2022. And in contrast to this, NIO's full year of 2021 vehicle gross margin was actually 20.1%. So the weaker vehicle gross margin guidance for this year is largely due to expectations of higher raw material costs, which are going to drag on NIO for the year of 2022 and their profitability. And provided that we've seen NIO increase their deliveries year over year for the past few years, and even month over month despite everything that's going on, including the part shortages in the auto industry, this is going to set the tone for NIO over the next few years, and it's going to be one of the big things that determines whether people invest in NIO or pass on them. NIO actually announced in their Q1 vehicle deliveries at the beginning of April that they had delivered 25,768 units, which was equivalent to a 29% increase year over year. And this also represented a new historical high for NIO. And in the month of March alone, NIO delivered 9,985 vehicles, which was up 62.8% from February. Now, I've mentioned in previous videos that typically February is a lower month for NIO's deliveries because there's the Chinese New Year, as well as February being the shortest month, having 3 days less than most months. So when you add on the Chinese New Year and having 10% less days in the month, it goes to show that February is expected to be lower than other months. But even so, seeing a 63% increase almost month over month is pretty huge for NIO because there was a lot of people losing focus on NIO, and they were starting to think that NIO is possibly becoming bankrupt just because they were putting out less vehicles. But I think in the short term, NIO is still expected to grow throughout 2022, albeit at a slower pace as compared to 2021. And just as an example, the market consensus sees NIO's revenue growth slowing down to 75% in the year of 2022 as compared to an increase of 108% in 2020 and an increase of 122% in 2021. But leading into the next 5 years, NIO is expected to scale up their profitability, and this is going to be one of the keys as a medium-term catalyst for NIO stock. There are a lot of other companies that NIO's compared with, but most of these companies that people talk about are already profitable. That's the one place where NIO's really lacking as compared to other EV stocks and other auto manufacturers, because they have yet to become profitable. But actually at their Q4 2020 investor call, NIO noted that they expect to achieve break even or reach profitability in 2024 for the full year. I think this is a very realistic timeline for NIO and when they could become profitable, but historically they've been focused on the premium segment in the Chinese EV market. Now, if they are to grow their sales as fast as the market expects, NIO is going to have to be successful with their efforts to penetrate the mass market segment. They're going to have to either expand out of just the premium segment and make vehicles more affordable for the masses so they get more customers, or they have to find a way to market their current vehicles, which are in the premium segment, and they wouldn't have to get as many customers through the door, but they would still have to sell significantly more vehicles than they're selling right now. But with the launch of the ET5 model, this is a key move for them to grab some of the share of the mass market EV segment in China. NIO actually highlighted in their Q4 earnings call that the ET5 has attracted a wider and more diverse user base as compared to other models. But with this in mind, it's still too early to conclude whether NIO is going to be able to compete well in the mass market segment as compared to just the premium segment. NIO themselves have acknowledged that they need to be efficiency driven, and they also added that they have to rethink the fundamental architecture of their product. And this is with respect to the mass market, and this is going to include factors like materials and manufacturing technologies. So basically, to sum up what NIO has to do in the next few years is they have to do well in the mass market segment, and if they don't end up doing this, this is going to translate into a slower pace of sales growth, and it's going to take a longer time to reach profitability. And the more NIO delays profitability, the less investors they're going to see, because the investors are going to see a company that can't break a profit, so they're not going to invest their hard-earned money into a company that they don't believe in long term. But of course, there are things that differentiate NIO from other EV companies, and one of those main things is actually the battery technology that NIO uses. Basically what they do is they swap batteries where you drive into a swap station and it takes out the battery from underneath the car and replaces it with a new battery. So in a matter of 2 to 3 minutes, you get a fully charged battery as compared to having to sit around for 30 to 60 minutes waiting for the battery to charge. But something pretty huge that happened recently is that NIO announced that they possibly may license out their battery swapping technology to other EV manufacturers. Now, over the past few days, we've seen their share price drop slightly, and this could be just due to profit taking after NIO shares have soared more than 60% from a recent low in mid-March. But with the possibility of licensing the swap technology, that could potentially be a very big catalyst for NIO, especially if they publicly announced that they were going to license it to other EV manufacturers. Right now, it's just a discussion and there's no confirmation yet, but if that were to be confirmed, I think we could see NIO's share price shoot up pretty drastically. And the main reason for this is because NIO would then be making money off of other EV companies. As the other companies grow and use their technology, NIO is going to be bringing in passive income from these other companies, and they're not going to have to do anything except license out this technology. And if NIO were to license out their swap technology, that's going to give them a leg up over the next 5 years, and I think that could help them turn a profit even sooner. If they have more cash on hand or cash equivalents, they're going to be able to invest in more technologies and really improve their vehicles and most likely get more vehicle models on the road over the next few years. But for those of you who made it this far into the video, I want to know when you guys think NIO is going to become profitable. Do you think it's going to be in the year of 2024 or do you think it's going to be sooner or later? Let me know down in the comments. Also, if you guys haven't signed up for Webull yet, if you sign up and deposit $100 using the link in the description, you'll actually get 5 free stocks. So make sure you guys sign up while this offer is still available. And if you guys enjoyed the video, make sure you leave a like because it really does help out the channel. And with that said, thank you guys so much for watching and I'll see you back here in the next one. Bye.